Our next session, Global Islamic Capital Market Outlook, will be covering particularly on Global Sukuk Outlook, Asset Management Updates, Private Equity and Venture Capital, Investment Banking, Global Liquidity Management. And I will leave the floor to our moderator of the next session, Chairman Malaysian Islamic Economic Development Foundation, YAPEIM, Yang Berbahagia Dato Muhammad Redza Shah, Abdul Wahid. Sir, the virtual forum's all yours. Tafadhal.
Thank you. Assalamualaikum warahmatullahi wabarakatuh, and good evening, everybody. It's nice to see so many people involved in this virtual session. I must congratulate the organizers, because we miss having conferences, and to have one of this nature, we really appreciate, and I do hope that this will be the start of many sessions that will come either virtually or otherwise, because there's lots of things that we are still asking and haven't got the answers on the Global Islamic Capital Market Outlook. I've got a panel of very five esteemed guests, and I will not introduce them in the interest of time, but there's some burning questions that we want to ask, especially with regards to the markets. We see the markets have slowed down, but we haven't seen collapses. We've seen debts which have been in moratorium, and there are a lot of burning questions that we ask. And the speakers we have today will cover the whole sphere of things. And in some ways also I can cover a little bit, because I'm in microfinance, and I've seen some of the Aranu at the lowest level of the market. But we will hear each one of them. I will start the session first with from CIMB Islamic, Ahmad Shahriman Mohamed Sharif, and pass the floor to the CEO of CIMB Islamic, Ahmad Shahriman. Please go ahead, Ahmad.
Right. Thank you, Dato. Assalamualaikum, and good evening, good morning, and good afternoon to all of you viewing the conference. Okay, I will start off by giving some overview or what you call this trends which will actually affect the capital markets, or what in my perspective, things that we really need to look at as we develop the Islamic capital markets further. And these are actually things which actually affect the development of the Islamic capital markets. So I think, as what was rightly pointed out by the earlier panelists, Dr. Firas specifically, is that what we call this, one thing that we are seeing specific for the COVID-19 is that the pool that actually drives the development of the Islamic funds, the accumulation of those funds have actually been severely impacted because of the COVID-19. Now, what do I mean by that? So if you look at the Islamic banking markets, and that's where we have most data on and so on, in the region or globally, that's where an area of growth that we have seen traditionally over the last 5 years. So we have seen very strong accumulation of funds from retailers, from institutional clients, and that actually drives the development of the Islamic capital markets. But the COVID-19 and the way it has affected the Islamic, the Muslim countries, disproportionately affected Islamic countries, has actually taken the wind from the accumulation of funds. So if you look at the latest estimates based on the vaccine rollout, most Islamic countries are only expected to go out of the COVID-19 situation only in 2022. So you will see that when the two-track economy emerges, i.e. the countries which are vaccinated and back operating as normal, and versus those who are not fully vaccinated or still being left behind, you'll see that countries where Islamic finance are very active are going to be in the second group. And because of that, our participation in the global economy, global recovery will also be impacted. So I think that is one area that, as we discuss this topic about Islamic capital markets, we really need to think that how do the Islamic capital markets going to operate or develop in an environment where the accumulation of funds are actually severely impacted. And we already seen the numbers in the banking numbers as well. The year-on-year growth on deposits and so on is muted, and we'll see this further as losses materialize, credit losses materialize, as all the moratorium program end. You'll see Sukuk losses, financing losses. You'll see government balance sheets diminishing. So you'll see the funds that's been driving the Islamic growth will be diminishing. So this is something that we really need to work on the Islamic capital markets outlook. But on the plus side, we are seeing some positive signs. For example, oil prices are recovering and has gone up strongly. And that could also be an area that could help to buoy the Islamic economies and so on in their recovery. So that is the stage where we're looking at. So the funds that have been driving the Islamic capital markets are actually dwindling or might be severely constrained for the next few years. So then the next question, as we discuss the outlook, is what do we need to do in the Islamic capital market space to actually then replace or cover some of the shortage and so on. And I think this is where the focus should be for the industry. Number one, because we do realize that there is a need. So the need is really what I call this is a given. So the governments need to replenish, need to fund their programs and so on, and corporates also need to refund, and businesses need to refinance as they try to participate in the recovery. But where are the funds going to come from and so on? So I think this is where the focus area where we should actually, for the Islamic capital markets, where we need to pay more attention on. So number one is basically the area of mobilization. So I think an interesting area when it comes to mobilization of funds, at least in Malaysia or Indonesia, in countries that we are working on, operating in, we are seeing the concept of blended finance. I think that was mentioned by some of the earlier speakers. That's coming into play. So I think one way of trying to cover for the shortfall as well is to see whether we can use Islamic social finance mechanism like zakat and wakaf, incorporated into Islamic into concepts into our banking activities or even capital market activities, and to see whether that pool of funds can be mobilized and used more effectively in order to drive the Islamic capital markets to fund the recovery. So that's actually one clear area, and I think we are seeing work being done already. So we are seeing wakaf works being done on wakaf sukuk, and we are also seeing stuff being done where zakat funds are also being incorporated into the mechanism. So that's one area, the mobilization of Islamic social finance contracts or concepts into the capital markets. The second part is basically more on how do you mobilize different pool of investors, right? So traditionally, we've always focused on the banking markets, the banks to buy to support the sukuk markets, sukuk funds, large institutional clients. But we now need to work on how do we diversify into other types of funds. So this could be private wealth. Are we doing enough to tap into private wealth funds to invest into the Islamic capital markets instrument? That's number one. Number two, even the retail wealth, and I think this is where the digital efforts come into play, because I think Sukuk Prihatin was interesting in the sense that it tries to tap into the retailers, the wealth that's being held by the retailers, to actually support the capital market instrument. And I think we need to do more of that in order to supplement the diminishing pool, right? To increase the pool. Now, the third piece is then on the flip side, as we go financing and so on, while traditionally we focus on the banking market and the financing market, we also need to figure out, are we doing enough, for example, in the Islamic equity space, beyond the traditional equity, right? Or what I call this structured equity instruments and so on. In the past, this might not be relevant because we didn't have a strong pool of sophisticated investors who are pushing for Islamic instruments such as those. But now we are seeing the emergence of Islamic PE funds, Islamic venture capital, and they are increasingly asking us or asking the banks to structure sophisticated Islamic equity instruments. So I think that's another area that for us to also look at in order to widen the spectrum of Islamic capital markets. And lastly, I think we really need to fix, I think this is what the crisis also showed, there are actually still some structural limitations in the industry which needs to be fixed. So for example, in the Islamic treasury space, it is still the derivatives market to manage risk. That is still very, very underdeveloped. If you look at Bank Negara data, the Islamic profit rate swap, which is the functional equivalent of the IRS, is less than 1%. The volume, this is the most recent data for 2020, it's actually 38 basis points, right? It's 0.38% of the conventional volume. So it means that, what does it indicate? Without having even simple risk management solutions, how do we want to actually further develop Islamic capital markets in order to be able to tap or widen the pool of investors? So I think these are the areas of focus that I just want to set this conversation on. This is actually what we are seeing as a bank and also as an investment bank. on areas for further development in the Islamic capital market space. Dato, I'll pass back the floor to you.
Thank you. Excellent time. I'll give you 7 minutes and you're within that time. Cik Ahmad just talked about the Islamic finance market coming in late due to COVID-19, comparing ourselves to the other markets. Year-on-year growth and credit losses may happen as we move into the market, but there's the positive note of the oil prices going up. There are some suggestions that he's made in terms of looking at blended finance, in terms of moving us forward, and then getting others to come into the market, for example, private finance, and then on the equity space, the Islamic venture funds, there's plenty of room for that, and also in the derivative markets, there is also a huge room where there is no participation. Thank you. It's a very good summary, Cik Ahmad Shahriman. I'll move to the next panel of speaker. Can I have Dr. Mohamed Damak from the Global Head of Islamic Finance S&P? I pass the floor on to you.
Thank you very much. Hopefully you all can see my screen. I would like to first thank the organizer for inviting us, and it's a real pleasure to participate to this virtual forum. I'll start my presentation by sharing with you our view on the current and the prospective performance of the Sukuk market. And then I'll spend a bit of time about topics that are likely to be at the forefront of 2021. Hopefully, I would not surprise you when I say that COVID-19 and the drop in oil price represented the major shock for the Sukuk market in 2020. The economies of most core Islamic finance country went through sharp recession. Here you can see what happened for the GCC, for example, and don't be fooled by the shape of the chart at the left-hand side, because if you look at the quarterly data, you would see a U-shape rather than a V-shape type of recovery. And although things looks improving, major uncertainties remain, chief of which is whether the virus will be brought under control. In our base case scenario, we think that some countries will manage to do that in the first 3 quarters of this year, but for most emerging markets, it will unfortunately take a bit longer than that. Now, the impact on the Sukuk market was interesting. Again, we saw some numbers pointing out to an increase in the volume of issuance, but based on the methodology that we use, the volume of issuance in 2020 has dropped by 16% for the global Sukuk market. And the drop was not even. It was not even as we have seen an increase in FX issuance, driven primarily by banks trying to raise additional tier 1 and tier 2 instruments to benefit from the supportive market conditions. And also, we have seen a drop in the government agency and central bank issuances almost everywhere. If you look at the right-hand side, you can see the drop almost everywhere. And this drop was tempered a bit by those issuers that do not have other choices but to tap the Sukuk market, either because they cannot issue conventional instrument or because the access to the conventional instrument is a bit restricted to them. Now, in terms of our expectation for 2021, we think that the volume of issuance will increase in 2021. We put the number between 140 and 155 billion dollars. And the reason why we think this would be the case, it's because we think that some sovereigns will be tapping the Sukuk market more aggressively after going conventional in 2020. And to a certain extent, this reminds me of what happened in 2015 when oil price dropped and when all the issuers went rather to the conventional. The following year, they went to the Sukuk market. Second reason is the fact that corporate issuers will probably come back moderately in 2021 and to execute some of the capex that they have been obliged to defer in 2020. Third reason is because of the refinancing needs. I think in 2021, we estimate that there's something like $65 billion of Sukuk that will be maturing in 2021. And fourthly, the good liquidity in the market for now, because things could change as we move along in the year. Now, what to look for in 2021? The first thing is the eternal debate around standardization, which is starting to impact some of the issuers in the UAE, for example, with the necessity to comply with the AOFE rule and the tangibility ratio, and the fact that issuers need to maintain the tangibility ratio throughout the lifetime of the transaction is having an impact on the hybrid structures that are being issued out of the UAE. But the good news here is that the Dubai Islamic Economy Development Center is planning to come up with a unified global legal and regulatory framework for Islamic finance. And I think if they manage to achieve that, and depending on the form and depending on the intake of that framework by the global investors and issuers community, I think they could eventually come with a once and for all solution for the standardization issue that we've been facing for as long as I can remember in the Islamic finance industry. Second interesting trend is green and social instrument. I think they've been, they were mentioned in the previous panel, and I guess the opportunity is no longer to be demonstrated, but we still expect the contribution of these instruments to remain low in 2021. We expect the contribution to remain low, not so much because these instruments do not have an economic added value, but because simply of the additional layer of complexity that is attached to these instruments. And finally, we expect more defaults. And we think that more defaults will be coming because of the recession. And here, sectors under stress include the airlines, real estate developers, and we saw that already with Garuda Indonesia, for example, when they extended the maturity of their Sukuk. Default is not necessarily a bad thing, because here it will test the robustness of the legal documents, and which could be positive at the end of the day for the investors, because it would show whether the legal documents are working up to the expectation. It would also help to test some of the improvement to the insolvency regimes that were introduced by some of the core Islamic finance countries over the past few years. So ultimately, having a Sukuk that goes through the exercise of default could certainly add value to the investors, in the sense that they would know that there's no access to the underlying asset. They would know what mechanism of recourse they have. They would know where they are obliged to share the losses under some transactions. Maybe I'll stop here. Thank you.
Excellent. Thank you, Dr. Mohamed Damak. Very good summary. You talked about how there was been a sharp drop in the Sukuk issuance in the markets. Also, for most institutions, get ready your investment banking team, because they're going to be busy. There will be a lot of issuance coming out from all this because of the need for refinancing. You're already seeing banks requiring tier 1 and tier 2 capital. And also, you mentioned about DIE-DC, which is trying to do a unified global legal regulatory framework. And also, the continued disappointment of Islamic finance in terms of green finance is going to be quite insignificant. We hope for more to come from that. But defaults will also occur. So that's something we don't look forward to, but I guess it's something we have to face. Thank you again, Doctor. And I move on next to Shahril Anas, CEO of MAVCAP. The floor is yours, Shahril.
Assalamualaikum warahmatullahi wabarakatuh, and a very good day to everyone. My approach to this topic would be much different from others. Why? Because as a VC, our business model is totally different from everyone here, I think. Basically, what we do is only three things. We raise, we invest and we exit. And during pandemic, we couldn't raise because we couldn't travel. We couldn't invest because we couldn't travel as well. We couldn't meet people. We couldn't exit as well because no one want to buy the private assets. So it's not all gloom and doom. But then again, 2021, we see light at the end of the tunnel, whereby all the startups that we nurture and we made investment 2-3 years back, we tried to lengthen their runway, even though they are laid off, they are furlough some of the staff, but unfortunately, some of them are getting better. And there are winners and losers. I talk about the losers part first. The losers would be those in the travel and hospitality industries. So suddenly from hero to zero. And when, some of the companies sit as a board, and when you do the financial, when you look back at the financial modeling, and when you do stress tests, we never did 100% down on revenue. At most 50% down on revenue, right? So suddenly from hero to zero. But fortunately enough, we have some industry, e-commerce, together with logistics. They thrive during MCO because they couldn't do B2B, no doubt, because they're actually no business, but they are actually gain on B2C. Remember last time when we couldn't go to the marketing, we asked Grab or one of our startup actually pivot. A pivot is the key here, because during crisis they need to pivot from the original business into another income stream. And looking at funding, just like I said earlier, 2021 we see a better picture whereby now we can explore truly explore local CVC, corporate venture capital. So we met several people, meaning in Zoom, not actually can have coffee and whatnot. It's quite tough to convince for them to put in some money into us. But then again, our strategy is always looking into startups, and as you know, startups and most of them are not eligible for debt financing yet because they are still cash negative. So as much as possible, we try to structure equity based, but in form of debt. So it's actually in VC we call it bridging. So we bridge in a way that along the way when we can lengthen their runway, when they do another fundraising, we can actually convert the debt into equity at a discounted price. So this is how we have the companies. And in terms of, I think you guys are the luckiest among everyone because I need to raise and I need to invest as well. Exit, I think not this year, maybe another 1 or 2 years, because we need things to be normalized. We need things to at least, if not 100% normalized, at least 50% normalized. I told you earlier, it's not gloom and doom. We actually thrive. Part of our business is still okay. But unfortunately for hospitality and tourism, they really suffered, even domestic tourism. Thank you.
Thank you, Shahril. That was talking about mainly the demise of the travel and hospitality industry and the difficulty of funding that the industry is facing, and the longer timeline as well that you will need to go through this market on the VC side. Let me just pull through next to Shaharudin, President of Saturna, and if you can start your presentation, please.
Assalamualaikum. Good day to everybody. Okay, I'll be talking from the asset management view. Next, please. Okay, I'll be talking about, we'll start here. Be talking about the worries that as a senior management in asset management or in investment company that we look at. We look at these 4 factors. We worry about our assets, how we're going to grow our AUM. We look at our funds, how we want to increase our funds performance. And we look at the market, as you know, where's the direction of the market? and we also want to reduce our costs. And these are not new things that we talk about. I think the senior management of other companies of 100 years or 50 years ago are looking at the same factors as we do now, but the solution may be different. And after going through the meetings, I realized that these issues are actually related to digitalization. Okay, next, please. Yeah. We know that there's a buzz of news going on in the market now. We are talking about the Elon Musk and talking about Elon Musk and Bitcoins, and then there is GameStop, and then Wall Street bets, and then we're talking about the yield moving up and the fiscal policy, and there is this monetary policy, and there is valuation issues where we are talking about stocks being overvalued. These are all market volatility, and whether the market is up or down, we as the asset managers we have to ensure that our fund perform. And how do we do this? And how do I actually cut down on my worries? We as a value asset managers, we fall into the long-term investment, fundamental investment. We are bottom up, so we actually have rigorous research, and we look for stocks or companies that actually have strong cash flow position, stable management. We look into leadership in the industry. We look at attractive balance sheets. So all these involve a lot of stocks. Could be thousands of stocks inside here. So we have to have this, how to manage this, how do you monitor your stocks? So you have actually to have an investment process in place. And how do you go about doing that? It is digitalization again. Okay, so next please. And beside looking at the fund performance, I want also to reduce costs, and I love my staff and I don't want to cut them off. But how do we do that? We have to look at enabling digitalization enabler. Okay, and that will actually increase your reach out into the distribution side, and will also help you to reduce your agent workforce costs, and this will lead to greater reach. And that will, with that, we go to the next slide. Next slide, please. And with that, we will see a growth in AUM. We look at a reduction in our costs, and we want to increase our fund performance, and with that, we create demand for our products. So that will improve our AUM. And in all these issues, in summary, we are actually looking at embracing digitalization as we move forward. Next slide. Yes, next slide. Okay, and in the current situation now, what does the investor want? They are looking for low fee funds. They want easy access to the product, and they want fast information. So where do we go? Where do we put our funds? So we actually put our funds on our mobile apps, on our put it on our online platforms. So that will actually improve the reach out, and it can be also a global reach out. And the other way, as an asset managers, we have to have our investment process in place, like what you see here. And what we do is we embed it, we code it, and we actually we have the filter in place. And in that manner, we can actually monitor thousands of shares that we can consider, and the way forward is to digitalize this investment process. Next. Yeah, I think I've actually lowered down my worries just now, but there is still disturbances in the market. I will share you some pictures with you. Yeah, next slide, please. Yeah, this is a common site in Kuala Lumpur. If you live in Kuala Lumpur, that could be the it's like an annual site that you have. I mean, this is haze in Kuala Lumpur, so it worries us, right? And this, I think we've been wearing masks prior to COVID-19, and this another worrying picture here is wildfires that's happening in the world. This could be in California or could be in Australia, or it could be also in Indonesia or Malaysia. I actually don't know where this is from now. Okay, next. And another picture here is the biggest oil catastrophe in the world is at the Gulf of Mexico. And this can actually happen in any parts of the world. It can be at Maldives, it can be at Nigeria, and it can also happen at Middle East. So those are worrying pictures. Next picture, please. Yeah, this is in Antarctica where climate change, because of climate change, the ice actually melted. And we know that climate change will lead to bigger risks and bigger crises. It can be drought or it can be flood. And we see all these worrying pictures, disturbances in all the social media, in the internet, on TV, and millennials look at it every minute. And it's on their Instagram, on their WhatsApp, and millennial will not actually invest in stocks that will harm the environment. So they naturally become a sustainable investors. And climate change has also led to financial institutions and investors looking into ESG investment. And these worrying pictures actually they may worry us, but they can also create demand for an ESG investment. What drives ESG? Next, please. Yeah. Okay, these are the three factors that driving ESG. One is demand, as what we have discussed, demand from financial institutions, demand from millennials, demand from investors, and also from the supply side. Supply of ESG funds has become sophisticated. They come from the banks, from the asset managers, and the other factors are the push from the regulators. So these are the three factors that actually create ESG demand, and ESG requirements or ESG factors are actually complements the Sharia investment as well, and this can be seen in the hadith. A lot of ESG factors are all over the hadith. And next slide, I will just run through some of the factors in the hadith. So these are environmental factors which are in the hadith. Okay, we know that Islam don't encourage us to cut trees, don't encourage to waste water. So you have factors like planting of trees in the hadith, conserving of resources, conserving of water in the hadith, and the hadith also cover the social aspect. Next slide. And the social aspect that the hadith covers is like anti-discrimination, care for employees, rights of employees, and the environment aspects also covered in the hadith. Can we go to the next slide? Okay, these are some examples of the governance aspect in the hadith: accountability, corruption, abuse of public position. Next slide. So we know that the hadith is closely, the ESG factors are closely aligned to the hadith as well. And in conclusion, I go to the next slide. Way forward is my forward is continue, but moving rapidly into the digital space and SRI. We know that accelerating demand for sustainable products coming from millennial and ESG may strengthen long-term financial performance, and suppliers of ESG funds are getting more sophisticated now, and climate change is dominating the SRI investing space, and Islamic ESG is embedded in the hadith, leading to Islamic investing 2.0. Next slide. And way forward, there is opportunities for the Islamic core financial countries. And we know like Indonesia, Malaysia, and GCC, we went through a difficult time in 2020 where we went through a recession. But moving forward, the forecasted GDP figures show better figures and a positive growth, and more monies are coming into the emerging markets, and we know that this will give traction to either the Sukuk space or the equity space. With that, I end up my presentation. Thank you.
Thank you, Shariah. And basically, I think you mentioned about the three characters that you look at: asset, funds, and market. But you emphasize a lot on digital and the need to reduce costs, and the moving forward, the space of market will look at low fees, and also the importance of ESG and Islamic finance that you emphasize upon. We'll go straight to the last speaker, Dr. Umar Oseni, CEO of IILM. And if you could please take the floor, Dr. Umar.
Thank you very much, Dato. I'd like to begin by thanking the organizers for inviting us to share some thoughts on global liquidity management. And again, I'll be giving you some examples of what we're doing to improve cross-border liquidity. As we all know, the year 2020 was badly hit by the global pandemic, affecting not only the financial sphere, but also lives of billions of people across the world. Thankfully, the Islamic banks entered the March 2020 crash, better capitalized than during the global financial crisis. However, the main difference between the GFC and the recent pandemic-induced crisis, which is often called the Great Lockdown, was not only the immediate intervention from the central banks to mitigate the liquidity stress, but also the unknown impact of the economic shutdown globally to counter the spread of the pandemic. Now, pricing, risk metrics, credit exposures, have been stressed with a major impact on short-term funding, especially the USD denominated markets. In IILM, we are basically in the USD markets. So that's why most of the examples I'll be giving will be more of the USD cross-border market when it comes to liquidity management. Financial distress is often targeting vulnerable countries and institutions. And this time, the rule stands with emerging markets risk-bearing the heaviest burden. Islamic financial institutions, mainly present in emerging countries, face the same situation where reforms from the global financial crisis and nature of asset-backed businesses mitigated the damages to a large extent. Now, the development of Islamic market infrastructures generally, as well as the industry standards, as we have seen earlier on, we had the IFSB, the World Bank, on the last panel. Now, when you look at the industry standards and tighter regulations as a result of the post-crisis reforms, these have actually enabled institutions to absorb the COVID-19 market shocks. But as of today, there is massive cash and liquidity, not only in the conventional market, but also in the Islamic markets, with investors hunting for yield in the front end of the curve. Short-term maturity debt remains in high demand as investors look for safety instruments through cash alternative. Just to drive home this important point, the last IILM Sukuk auction in February confirmed the abundant US liquidity currently flooding the market. On the 15th of February, we actually issued 3 short-term Sukuk for a total of $1.35 billion, the highest size ever. But again, this month of March will be the highest because next week we'll be issuing $1.4 billion short-term papers. Now, what I was saying basically here is we issued $1.35 billion last month, and that was split between 1 month, 3 and 6 month tenors. And the auction garnered a high demand with a total of order book of $2.4 billion and a weighted average bid to cover ratio of 176%. The successful auction was also supported by the lack of alternatives in the Islamic finance industry for high quality liquid Sukuk, while investors are also looking for yield pickup since the short-term benchmark rates are reaching all-time lows. Indeed, as you have heard in the earlier comments, the earlier discussion we had, the global Sukuk issuances this year has not really picked up much steam yet. But again, I think S&P forecast is quite good, and we hope for the best for the industry. The global short-term benchmark rates are approaching 0% and could likely become negative shortly. The liquidity surge worldwide is also putting most of the market on the same way, looking for assets to place their extra cash. Well, the situation is likely to continue if we do not experience massive global economic recovery. Now, the establishment of the IILM as a cross-border liquidity tool provider is an example of this development and an answer to the market to help institutions to cope with liquidity issues within the Islamic, but also conventional worlds. The access to high-quality assets contributed stability to the industry, including banks and non-financial institutions. As a complementary tool, the IILM Sukuk actually blends perfectly with fiscal and monetary policy established by central banks to maintain the flow of liquidity within the economies and serve all financial institutions. People often think we actually issue short-term papers only. No. On the long end, we actually provide funding to sovereign entities across the world. This actually had a lot of relevance during the peak of the pandemic last year. Even though the Islamic financial industry has developed significantly, the coronavirus crisis is a reminder of the long road to achieve long-term stability. International bodies and central banks can impact the macro landscape, but are limited in action. So the IILM aims at offering readily available tools, such as high-quality assets dedicated to help institutions to manage their liquidity while complying with regulations. Now, the 2020 COVID-19 crisis was a real test drive, showing the importance of such institution and its relevance. At the height of the pandemic, back in March 2020, the IILM was able to address the demand for high-quality liquid assets, which hit the highest level since GFC, by successfully issuing various tenures, allowing Islamic banks to not suffer further from the adverse market conditions and to comply with their own regulations. This was accentuated in jurisdictions where the IILM Sukuk benefit from regulatory treatment. The total volume of the IILM monthly issuances remained unchanged, while some tenures were adjusted to fit the investors' needs of liquid papers. Now, as regulatory requirements became paramount in this context of uncertainty, the need for papers classified as HQLA Level 1 became more obvious. And as you are all aware, the banks mainly use very short tenures to fill out this requirement. Therefore, the IILM chose to increase the supply of 1 month tenure from $200 million in 2019 to $400 million every month as I speak. This has received a strong demand from Islamic banks, probably due to the LCR requirements under the Basel III framework. Indeed, the ALM desks and overall financial institutions were looking to park cash in short-term bucket through safe haven instruments. Now, even though regulators with Islamic banks in the jurisdictions offer Islamic liquidity instruments in local currency, the IILM remains the only paper or the only player globally focusing on the cross-border Islamic liquidity management. I recall there was a discussion in the last session, and I saw some questions regarding Murabaha and the creation of debt. And I think this is something sensitive, and it's important for the industry to actually look beyond Murabaha. I'm not saying Murabaha is wrong, but Murabaha has helped a lot to develop the industry. But again, we should actually explore liquid papers, liquid assets in the industry. And this actually emphasizes the relevance of an institution such as the IILM. But again, we are not providing enough instrument to the industry. I'll tell you more about that shortly. The IILM business model is a two-way road and acts on both ends of value chain and liquidity stream. That is, we actually provide liquidity tools for Islamic financial institutions on the short end, and we also serve as a funding platform for sovereign entities on the long end. And funding needs have tremendously surged after the shock of the start of the pandemic from all levels, and especially from sovereigns, which needed to anticipate first the adverse effect on the budget and state foreign reserves. The unique platform developed by the IILM acts as a real partner to governments and central banks in their objective of stability and support of the economies. In 2020, without traveling, the IILM has, in an unprecedented manner, increased its funding base by 80%, from $1.96 billion in January to $3.51 billion in September 2020. Again, this was also as a result of the pandemic. We had to just do this. at that time, and thanks to the stakeholders who actually supported this. And this actually made possible, thanks to the PDs, the primary dealers, including CIMB, Islamic, the CEO is here with us today. They've been very supportive. And this actually enabled the IILM to increase the program size from $3 billion to $4 billion. All happened at the peak of the pandemic last year. Now, ladies and gentlemen, I think I know for a fact that one important question on the minds of many listening to this session today is what are the key features of the IILM Sukuk? Now, I would like to just briefly talk about this because I'm conscious of the time. The IILM Sukuk as a liquidity management instrument has certain key features. It comprises high quality Sukuk backed by a pool of sovereign obligations. The IILM Sukuk has an 8-year track record with 131 issuances with a cumulative total of $64 billion issued since 2013. The IILM has a scalable issuance program to address market demand with short-term Sukuk ranging from 2 weeks to 7 months. With upsize of the program, which we did last year at the peak of the pandemic, the IILM actually currently offers a monthly Sukuk auction above $1 billion with multiple tenures of 1, 3, and 6 months. Having provided a snapshot of the IILM Sukuk as the only cross-border Islamic liquidity instrument, I would like to conclude with some thoughts on what is needed going forward to enhance the Islamic money market. Now, more issuers of short-term Islamic instruments, as well as broad and active investors, will definitely support a deeper Islamic money market and the establishment of a much-needed Islamic benchmark yield curve for the Islamic finance industry, especially with the upcoming LIBOR transition. The IILM effort focusing on the short end of the curve by consistently issuing benchmark-sized sovereign-backed Sukuk more than $1 billion a month in various short-term tenors could actually support the creation of a low-risk or even a risk-free rate curve. The liquidity stress due to the pandemic has also clearly shown the need for an effective Islamic repo cross-border framework to support Islamic banks' short funding needs globally. This is an aspect we'll be focusing on later because there are Sharia issues actually regarding the Islamic repo. And at IILM, we will be organizing a workshop soon or a roundtable to bring all the scholars together to discuss the Islamic repo framework. Because the lack of harmonization and wide Sharia acceptance have prevented development of a strong, liquid Islamic repo market, which will have provided an additional source of liquidity to banks outside their own jurisdictions. Secure short-term financing instruments is a cornerstone of the conventional bank industry, whereby $1 trillion in collateral value is traded per day in the US repo markets. Therefore, I would like to emphasize that similar to the conventional repo markets, or the repo rates basically, profit rates on Sharia-compliant overnight repurchase agreements will be a key indicator on the ongoing liquidity among the Islamic financial institutions, as well as their short-term expectations. Without doubt, proper liquidity management requires not only relevant instruments that can be bought and sold actively at any point in time, but also liquidity risk monitoring tools, basically, for the Islamic financial markets. Thank you for your rapt attention, and I will be very happy to come back to answer some of your questions. Thank you, Dato.
Thank you, Dr. Umar. And I think you clearly state that although there's financial distress coming, there's a lot of liquidity in the market, and the market is hungry for quality issuance, and always look forward to your benchmark pricing. That's always useful for the markets. We don't have much time, but I've got an interesting question that I would like to put out to Dr. Damak. This is from Izzat Hakimi. He says that, as you rightly said earlier, any resolution of default in Sukuk will surely be a test of enforceability. Do you think it will be an issue that will scare the potential issuance in terms of issuance of Sukuk? Now, I just wanted to partly answer some of the questions. When I was at the bank in my earlier days, there were a lot of Middle East Sukuks that really tested the structure, and as a result, that we could not enforce a lot of the legal enforceability on those Sukuk. We did not invest in the Middle East Sukuk, and for the longest of time we didn't do that. So I do hope that the part 2, which can happen to any part of the world, will not happen. But please answer the question, Dr. Damak.
Sure. Thank you very much. I think that would be definitely helpful. Again, it's probably strange to see someone representing a rating agency talking about default as being a good thing. But here, default would help the investors to understand what they are getting into when they invest in Sukuk. Because every now and then, when I participate to conferences or speak to investors, I hear commonly the view that Sukuk are collateralized debt. They are not. There's no access to the underlying asset. This has to be clear in everyone's mind. I think it was tested back in 2010 with the real estate crisis in Dubai, when plenty of investors were happy that Nakheel would default on its Sukuk because they would have access to the underlying asset, which is the Palm Jumeirah. But this did not happen. And what investors are buying at the end of the day is the beneficial interest into the underlying asset. And I think every now and then, when you have an increase in defaults, that gives the impression, that gives the opportunity to test the legal documents, to correct where there's an issue or where the legal documents do not function as expected. Another case that I could talk about is what happened with Danagas. And after what happened with Danagas, the changes that we saw in the legal documents. For example, now we have a clause in each and every contract that prevents the issuer or the sponsor to question the Sharia compliance once the transaction is closed. And that brings again the broader debate about standardization, which is a debate that I've been talking about since I started looking at the Islamic finance industry long time ago. And unfortunately, we haven't moved that much. Yes, there have been some improvement in the legal documents, but we're still far from a situation where issuing a Sukuk is equivalent to issuing a conventional bond from a time, effort, and complexity perspective. Yes, we have standard setters, and with all the due respect to what they do, I think standardization is also about inclusive standardization. You cannot come up with standards that will, at the end of the day, not be applicable in the real world. The standards would be useless if they do not take into consideration all the feedback and all the comments and all the practices of the market. And this is why I said earlier that probably what the Dubai Islamic Economy Development Center is doing could come with a solution to this problem once and for all, because they have adopted a consultative approach. They have many prominent players around the table, including the Islamic Development Bank, including the AOEF, including other stakeholders in the Islamic finance industry. And depending on what will come out of it, and I think they said publicly that something will come out of the project in 2021. Depending on what will come out of it, and depending on the intake of the investors, we might come up with a once and for all solution to the standardization problem.
Thank you, Doctor. We are running out of time, but I have a question for all the panel, but maybe you can wrap up as we ask the question. Ahmad, Shahriman, tell us how you've been coping with the moratorium, and also what it's been like, and also the general questions that's been asked, which I want all the panel to answer, is you talk about the muted growth of Islamic finance. What is preventing this muted growth, and what are the challenges that we are facing? This is a question to all the panelists as well. So Ahmad, if you can answer and also wrap up within the next 45 seconds.
Yeah, so I think for the moratorium, I think it was a very interesting period for all the Islamic banks, because like how the Sukuk defaults actually allow us to kick the tires on the Sukuk contracts. This one actually allows us to kick the tires on the banking model itself. And I think, and I can speak from our experience in Malaysia and also in Indonesia, I think the banking system has responded very well. Islamic banking system has responded very well. And we try to incorporate as much as possible the principles of Islamic finance, try to create some differentiation from the conventional treatment. So I think over time, that will become noticeable to the customers, whereby the application of principle of ihsan, for example, where the SEC has ruled as a differentiating factor for Islamic banks in dealing with troubled borrowers and so on. So I think that is a short answer to that question, but I think it gives us opportunity to test as well as to differentiate ourselves in how we treat our customers. And now in the recovery phase, we are trying to use the more, and you can see a lot of initiatives using wakaf funds and zakat funds to actually help those who are severely impacted by the to get back on their feet. That will nicely link into the financial inclusion piece. Yeah.
All right. Thank you. Shahril, Anas, perhaps you have an industry that is struggling, and how are you going to come out of this? And what do you see the challenges coming out of this? Again, 45 seconds.
Okay, Dato. I guess on the bright side, specs are in fashion and back. So specs actually raise a lot of money. So we can actually exit through specs. And number two, it is actually not only my concern, but my partner's concern as well. Because all these resources went into Wall Street, not Main Street. So actually, those that benefited is actually not the economy. It's actually the stock market or the equity market. So if we can actually reverse that, the resources or the capital goes into the Main Street rather than Wall Street. So I think the multiplier effect will be much higher. That would be my take on this.
Okay, thank you. Shahriah, perhaps you should tell us what to expect from your side on digitalization, and what challenges you see, especially in digitalization. And banks have got this common problem of KYC, and how you're going to overcome that as well in your markets and move towards digitalization.
Yeah. Okay. For us at an asset management company, the challenges if you are a value-based asset managers, or you are doing for us here, we focus on Shariah ESG. The challenges that we'll face is to educate investors. There is this myth that they believe that Shariah and ESG investing do not perform. So I think which is wrong. It has been proven that Shariah ESG investing do actually give a good performance, and this is the part where we have to do a lot of education and a lot of training for investors to be aware of this. And as we move forward, digitalization will definitely be in the space. And like I said, mobile apps will be in the picture, and then we have the online platform going to be launched, and those will be helped to distribute to a greater reach, and hopefully we'll get to the global level.
Thank you. Dr. Umar, you say you have a lot of money, and are you going marketing, or are you expect people to come to you? Are you going to create the instruments, or are people going to come and you create the instruments? So you're in a good position compared to all of us.
Yeah, thank you. Dato.
Summarize, please.
Yeah, generally we actually do physical roadshows across the world, but with COVID-19, we had to actually adopt the virtual roadshow option. So we do limited kind of marketing, when we meet with potential investors, and we also do that through the primary dealers. So when we meet with investors, sometimes we try to connect them with our primary dealers, because they have to place their orders at the primary market, and the primary dealers are allowed to bid at the primary market when we do the auction on a monthly basis. And they actually, the market makers, they distribute our papers, in the secondary market. So yes, we do not really have a lot of money. I was just talking about, there's a lot of liquidity in the market itself. So we do not actually do much kind of marketing like conventional banks, because we are not a profit-driven institution. We actually have a policy mandate as an international organization established, headquartered here in Kuala Lumpur, with 2 SPVs in Luxembourg, our issuer and our holding. So we actually focus on the mandate rather than profitability. But again, I have to make some profit so that I can pay my, my staff salary, definitely. So I think here I was talking from the very global perspective, setting a kind of recovery agenda for the global Islamic finance industry. I just feel there are some priorities we need to keep in mind from the perspective of global liquidity management. The coronavirus pandemic definitely should serve as a wake-up call and should be a catalyst for the much needed progress in the development of Islamic financial markets globally. Again, this is expected to help deepen the Islamic money market. It will also help in setting up an active Islamic repo facility, which is backed by high-quality assets. This also calls for strong collaboration between the regulators, Islamic market practitioners, Sharia scholars, and standard-setting bodies. As John F. Kennedy actually mentioned in his 1962 State of the Union address, the best time to repair the roof is when the sun is shining. Therefore, this is the time to act. Not that the current market conditions are ideal, but it could get worse. Therefore, we can no longer afford to delay the establishment of efficient and liquid Islamic financial markets. Thank you, Dato.
Thank you, Dr. Umar. Okay, we'll wrap up with Dr. Damak, and you're saying that defaults are going to happen. You've just scared a lot of risk managers. Do they have to do their provisions now, or do they need to raise their tier 1 capital and tier 2 capital now? So perhaps you can summarize, and we'll finish off the session.
Sure, thank you. I think many banks will have to raise their provision now that the regulatory forbearance measures will start to be lifted progressively. The fortunate is that we don't expect a big bang in terms of lifting regulatory forbearance. We think that the process will be gradual. I think what the pandemic has shown overall is that Islamic finance has the necessary products to deal with it. But we were a bit surprised that these products were not used as aggressively as one would have expected. For example, for social sukuk, we have seen only 2 social sukuk being issued: the Prihatin sukuk out of Malaysia and the sukuk issued by the Islamic Development Bank. For the green instruments, I think the opportunities are no longer to be demonstrated. Most of the core Islamic finance countries are oil exporting countries. They face the challenge related to energy transition. Yet, we haven't seen a major pickup in the green instrument. We hope that this is something that will happen in the future as we progress on the standardization and as we come up with much easier and much smoother process for the issuers to tap the market.
Thank you. Thank you very much. It's been a nice, lively session, although I couldn't embrace or see you all, but I hope the panelists are there. There were more than 500 panelists when we started, and I wish to thank the organizer as well for this session, and all of you. And sorry to take up the time, but I had 5 very good esteemed panelists here. It wouldn't be fair to give them the time that they needed if I didn't. So thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam. Thank you, Dato.
Dato.
Thank you.